Hello, everyone, and welcome to Jim Dalton's presentation on trading for the end of the year. This is webinar number 3 in a series of 5. It's December 7th, 2015, 9 a.m. Eastern. We'll go until about 10 a.m., but we will stay late to answer questions that come up. Thank you, everyone, for being here this morning. Great to see a full house. If you are not aware, the reports to supplement this presentation, Jim's 2 daily reports, are available at jdaltontrading.com. Go to resources, webinars, upcoming webinars, and on this particular title of these webinars, you'll see those 2 links below. If you're having a problem, please email me, and I'll try and answer your question through email as we're going through the presentation. Okay, this is being recorded. We'll upload it a little later, probably by about noontime Eastern, for you to review. And with that, I don't want to take too much time because we've got a lot to go through here. So thank you, everyone, for being here, and I will turn it over to Jim. Good morning, Jim.
Good morning. I'm going to ask a special favor of everyone out there. Don't ask any questions today because I didn't answer enough last week and Julie got mad at me. So if you don't answer any questions, then I won't get in trouble.
Hey,
Anyhow.
Excuse me, don't we all know you clipped out, you kicked the plug out, and you just couldn't get yourself to come back on. Jim's a brilliant trader, a little talented technically. We all have our pluses and minuses, but
we
here we are.
Both broadcasting to you today from South Florida. Julia is in Key West, and I'm in Naples visiting my sister. And we came down here for good weather, and so far all I've seen is rain. Record rain, I believe, since the time I've been here. Anyhow, we're going to start with last week and take a look at what led up to Friday's rally. Then we're going to move forward and talk about the start of this week. The first profile I'm looking at is 12-2. On 12-2, I believe that is that last Tuesday? Hope my days are right. You'll see that the market in the morning opened up above the previous day's high. And I'm sorry, it opened above, it opened within, went up, then it came back in multiple times. So the first thing you record is this was not a high confidence beginning to Tuesday's market.
Wednesday.
I guess this is actually Wednesday, isn't it?
Yes.
Wednesday. It's not a high confidence beginning to Wednesday's market. We opened, we went above Tuesday's range, came back in, we went back above several times, and so that is important to record. So it was not high confidence. We then got a second distribution. So it was a double distribution day going into I period. Before we get the really big break in I period, it was a double distribution day to the downside. Looked above the previous day's high, came back in, very grinding, grueling day. I'm going to split this day out because there is one important piece of information. Well, there's a lot, but look at I period. I period, a single tick above H period. That reference, when it looks a single tick above a previous buy, particularly on trend day, and this was a double distribution trend day to the downside at that point, wasn't a particular, was a double distribution trend day to the downside. One of our signature
Hold on, Jim.
30-minute high.
You're blanking in and out, unless it's just me. Are other people hearing Jim's voice go quiet? Okay, yeah. Okay, Jim, so just continue, but maybe just repeat the last couple of sentences. Must be your internet there.
I'm sorry, it may be an internet.
Yeah.
When I period looks a single tick above the previous 30-minute bar, That is one of our signature trades, and it is one it's an asymmetric day time frame short in this case. What I have observed since we had first identified this pattern, and so much about trading involves pattern recognition, is that while this is a potential signal for a short in this situation on this day, it is also an indication that we may come back there within the next day or two. And the reason for that is for a market to go just a single tick above a previous 30-minute bar to find the sellers, that is not a sign of longer-term selling or really serious money. That's an indication of more emotional short-term selling. So we looked above on Wednesday, we looked above I, the market then broke, and it broke very hard. At this point in time, Chairman Yellen was speaking and kind of reaffirming that there would be a rate increase in December. The market got extremely emotional over that, and as you can see, we ended up with a triple distribution day to the downside. Okay. A triple distribution day to the downside is usually an indication of a market that is getting too short. Okay, so let's stop right there for now. Right now, we come in and we say Wednesday's market was very short coming into Thursday. Now, when we have a multiple distribution day, we take the final distribution, we treat all of the distributions as separate days or auctions. So as a short-term trader, you're always looking for what is going on in the bigger picture, but you're looking for more specific short-term trades. If you treat a previous auction or distribution as a separate day or auction, what happened on Thursday, early in the morning, the market opened, the green dot is the opening, we rallied up above the upper distribution, the lower distribution, and then came back in. So in other words, the market attempted to trade out of balance and failed. Once it attempted to trade out of balance and failed, the destination trade becomes the opposite extreme of that distribution. Now, does it have to make that? No, but that is what we gauge against. So now we've got Thursday. We have a rejection above Wednesday's lower distribution, and then we get heavy selling all day on Thursday. So we have one distribution on Thursday, we have two distributions on Thursday, we have three distributions on Thursday. So total, if you look at the report that I wrote, total, I consider this was 6 separate distributions going lower. One of the things I said in the report was the fact that the lower distribution from Wednesday and the upper distribution from Thursday have some overlap. I disregard it. When I'm looking and I'm saying 6 distributions to the downside. So the report I wrote for some of the institutions that are client base, I wrote on Friday, coming into Friday morning, that the market was dangerously short. It just looked like when you see these multiple distributions, that is an indication of emotional selling. Larger money and institutions seldom butcher a market in that manner. They don't just panic and sell, sell, sell. Short-term money and daytime frame money has a tendency to do that. It's more momentum-based, and they just push it, push it, push it, and they got it to an extreme condition. And that's what I wrote. That's what the report said on Friday morning. Now, we come into Friday, and I'm not putting I don't want to confuse it. I'm not going to put the overnight inventory up here. But the overnight inventory was trading lower just prior to the opening. One more time, this is the lower distribution, just as we saw the lower distribution from Wednesday. We treat it as a separate day or auction. Now on Thursday,
No,
we
that's
had a
Thursday, Jim.
lower,
Isn't that
that's on
Thursday?
Thursday, we had the lower distribution.
Okay, thank you.
Friday morning, one more time, we open up just above unchanged. The green circle here is unchanged. We open just above the lower distribution, trade back in, and then the market begins to trade sharply higher. Usually when you get this many single prints early, that is generally an indication that the market has been caught too short. You just get that panic. You get inside the head of the people you are competing against. You know what it feels like when you're caught short. It's just this terrible, terrible, panically feeling, just get me out. And that's what happens down here. So one, from a mechanical standpoint, you have a lower distribution. We treat each distribution as a separate day or auction. When we have a separate day or auction, we are looking to see, are we in or out of balance relative to that distribution, the same as we would look on any individual day. So when we look down here on Friday morning, we are out of balance relative to this lower distribution. Combined with that, I have 6 distributions on the downside, which indicates to me that the market was terribly, terribly short because there was just a lot of non-thinking selling in there. Now, the market is underway on Friday. It is amazing some of the people I heard from. Some people couldn't get right with the market because somebody had told them, and they hear it all over the TV that, if they raise interest rates, markets are going lower. And that cognitive dissonance froze a lot of people in place. Other people were frozen in place because they had seen price take the market lower for the last 2 days, and sharply lower. And a lot of times that just freezes people in their place. When you look at the bigger picture here, and that's really what trading is about, you have to be prepared for what is really going on, and you have to be able to get inside the head of the people you are competing against. The people you are competing against were frantically selling the market lower on Wednesday, Thursday. Those same people are caught short on Friday morning. So then on Friday morning, we trade above the lower distribution. We are out of balance to the upside. This is an entry-level place. I don't know exactly where. It's immaterial. It's in get on the trade. You're out of balance. Your stop is going to be someplace back, a few ticks back in this distribution. The market then re-enters the middle distribution from Friday. Once it re-enters the middle distribution, the destination trade becomes the upper extreme of that distribution. On the first A period, and let me split this out for you. On the first A period, the market goes all the way through the second distribution and into the third distribution. Actually, first distribution, third from the bottom, first distribution, and it makes the point of control, not that it's that relevant on a trend day. When you have this many single prints and on a market that this aggressive, it is, Julia, your camera's on.
Yeah,
you know that?
I got it. Thanks.
It is very unusual for the market to give much back. We got a little bit of bringing inventory back into balance in B period, and then the market continued up again, looking above the high of the upper distribution. It didn't take out the high. Okay, it didn't take out the high at that point. So, but you came back down, you balanced for a while, and then you had another upside breakout. Now, this is a tougher trade to do, to get on board because it's gone up so far. I treat the E and F periods as kind of a short-term balance. When it comes out of balance to the upside of the E and F, I think that's another potential entry level. I don't know what everybody does and how you've been affected by price. But what you don't want to do is you do not want to short a market like Friday. If you're ever going to short a market like Friday, you do it very late in the day when it's pretty well expended. So now we've gone back up. We've taken out all of the lower distributions from Friday. We are now back in to the range from Wednesday. So we're back into Wednesday's range, and we then trade back up into the second distribution from Wednesday. We fell short of Wednesday's point of control. We did fall a tick short. Let me spread this out again. We fell short. Remember, I mentioned this I period early. We fell short of that rally in the afternoon, but it's always a reference. Notice overnight went to that reference. Okay, so what we had on Friday was an absolutely huge short covering rally because the market got ridiculously short on Wednesday and Thursday. The evidence of that being ridiculously short were the 3 distributions on Wednesday, the additional 3 distributions on Thursday. This was just non-thinking selling by the day and shorter term time frames. Those things happen in the market. Looking at these distributions, you could have been prepared for Friday. Now, while Friday is over, and I'm going to collapse these again. Okay, Friday was over. Now we have the upper distribution from Friday, or the final distribution from Friday. This now makes the 3rd day in a row that our early reference is the final distribution from the previous day. So before I open this up to questions, overnight trade is basically within the upper distribution, a little bit above it. One of the references that we use is going to be, whoops, I got that drawn wrong. We refer to this H period low at 282.75 as the afternoon pullback low. Trading is about change. What are you looking for today? Is there any material change relative to Friday afternoon? If we stay above the H period low, there is no relative change to Friday afternoon. There may be a change relative to price, but there's not a change relative to this final distribution. So as we start today, I'm treating Friday's upper distribution as a separate day or auction. And what I want to know, do I stay within balance relative to that distribution? Do I look below it and fail and come back in? Do I look above it and fail and come back in? Do I look below it and accelerate lower? Do I look above it and accelerate higher? If I look below it, the GH period, the GH pullback low is my short-term reference, and you can see that the overnight low was just a couple ticks from that. So that pullback low is not lost on experienced traders. That's why they were buying down there. They, just as we talk about it, they see it. Now, we could trade down below there, but to have any real material change today, getting down below this alerts us to the possibility that we're going to correct. To really have anything meaningful, I think you're going to have to start finding acceptance below 28 level, which puts you back into this lower distribution. Anything on the upside, I think you're going to need to get 2100 level, which has been where they've been selling the market from. So, I mean, those are my 2 broader references. But for right now, with 10 minutes to go to the opening, we're treating the upper distribution from Friday as a separate day or auction, exactly the same thing we saw occur on Wednesday and Thursday of last week. They were great tools for guiding us. What we want to know, are we in or out of balance following the open relative to this upper distribution? Trading is about change. Final comment before I open it for questions. This was an options expiration weekend, as are most of them anymore, and what we don't know is what kind of inventory adjustments traders are going to have to make from assignments that they received over the weekend. I have no sense of that whatsoever. So I'm a little cautious usually on Monday mornings. But for right now, we're looking at the upper distribution from Friday as our reference. Julia, I talked too much. Let me take questions, please.
No, that's great. Thank you, Jim. We have some questions. Oh, by the way, several traders did catch Friday. They're commenting that they saw it, and so congratulations to you all. As many as we had email us that couldn't buy it. We have questions. Do you still believe the overnight inventory is balanced? And could you mark unchanged just so people know that's where you're about measuring overnight inventory from? Okay.
There's unchanged. So you see that the overnight activity that took place above unchanged, the overnight activity that took place below it. I would basically say overnight inventory is about balanced.
Right. And later in the session now, it's been a little more trading to the downside. Yeah. I think that's why they're asking, but you're going to keep it balanced.
It's not my focus. My focus is really on the lower distribution. The upper distribution from Friday. As you see, the overnight inventory didn't take it out. So, we got a really kind of a double reference here. The overnight low at 2083.50 and the H period low at 2082.75. Right. So this is there's going to be stops here and there's going to be stops here. So this is kind of an important reference level. If they hit these stops, you got to be really careful. Sometimes they hit the stops and that's all it is. Once the stops are taken out, we come back and rally. So you got to be cautious because this could be a game just to go get those stops.
And Robert, does Jim wait before options expiration to trade on Monday morning? He said he's more cautious coming into Monday. Go ahead, Jim, if you want to say anything.
No, that's absolutely right. I don't have any absolute rules. As I tell people, I don't have a single rule I've never broken. But overall, I'm generally more cautious because I know there can be some strange things going on I have no idea about. But I also know if we're going to open within the upper distribution, I'm opening within balance. And if I'm opening within balance, I'm very seldom anxious to trade. Too many people are too anxious to trade when a market opens, afraid they're going to miss the best trade of the day. The time you trade early is usually when a market is out of balance or attempts to go out of balance and fails. When it's staying within balance, and I am using the upper distribution as balance, you are generally better off to let the market settle, get away from the chop. As long as you stay in that upper distribution, the odds are much, much higher that you're going to have a tremendous amount of chop in this morning. When traders trade and get caught in that chop, they usually cut themselves up financially, but more importantly, they drain themselves emotionally because they're long, they're short, they're long, they're short. I've asked a question on webinars sometimes, and it's amazing. In 5 minutes, we've had people that have done 3 trades. Whether they made money or lost money, that takes a lot out of you. And some of the better trades come up later in the day. Additional questions?
Yeah, and I think too, just to mention, I see some people putting in they bought options and traders that are familiar with how you do it. In this next intensive, for the first time, Jim is going to teach his options methodology. And on Friday, obviously, where do you put your stop in futures, trading outrights? You might have to give it some room. But with the options, the calls, I see people typing in their call prices. I mean, the calls were so beaten down. So to grab some calls when they're 20 cents or, they're very cheap, it makes for less risk. And yes, a little less gain, but less risk. So Jim's going to be going over how he uses the options in the next intensive. So if you're interested, and I know there's several out there, I think that's going to be a really neat part of the program.
Let me show you something. On Friday, I'm on vacation, and I was dying to buy calls. If anybody saw my report, I was dying to buy calls. And I looked at, I believe it was the 2060 calls that expired on Friday. I looked at them when the market was down someplace here in the lower distribution trading overnight. And I looked at the calls, and I think when I looked at them, they were, I don't know, maybe it's 445. So 445, take half of that. be what the actual cost was. And I said, well, that takes me to 65 to break even. And I passed because I thought they were too expensive, and I wasn't that anxious to trade because I was vacationing and hoping to go fishing that day, but the weather didn't permit. But I wanted to buy calls. I didn't want to be long futures, but I passed because I thought the calls were too expensive. I don't use Greeks. I'm just looking. I think they were 60s, and if they were 445, I mean I had to go to 65 even to break even. Well, it would have been a great buy, but I passed. So I don't always do it right. I don't always. It would have been absolutely marvelous trade, but I got a little bit scared. So we don't do it right. But that's what I was looking at on Friday morning in order to trade this market. And then I decided to vacation anyhow. All
Yeah,
right.
well, you were going to be in the
Other
car,
questions?
so you weren't going to be at your monitor and, being absorbed, so it's different. But yes, those are ES mini calls. Any options Jim is talking about, they're in on the futures contract here that we're trading, E-mini S&P, not the SPY or anything else, okay?
It wouldn't make any difference. I use the ES Mini, but it's the same principle. What I use the options that expire this Friday, except sometimes if you have a month end, they may expire on the month end day. But I use the shorter term options. I do not use any of the Greeks. I'm making a determination. Do I think the market can go to that level? I mean, with authority. Then I have several opportunities. I can either sell, if I buy calls, I can either sell them outright or I can sell futures against them in some ratio. Okay, additional
Okay.
questions with 3 minutes to go.
Yeah, the single prints down here below, Jim, do you see those as attractors for price in this type of environment? In other words, high odds
I
that they
don't
will be filled in?
I don't see them as attractors for price. What I see right now with 3 minutes to go, I have an overnight low at the 2083 change. I've got my go-to-meetings in the way, so I can't quite see what that price is. And then I've got the age period pullback low, I believe, at 2082. So there is the potential for stops below the overnight low as well as below the afternoon
82.75.
pullback. Okay, between the afternoon pullback low. So I'm looking at this area, and so if you got some stops, you may get back here and then get rejected, or you could trade down and take out these single prints. If you traded down early, took out these single prints, and traded back down, taking out all the single prints, I would see that as negative. But for right now, my focus remains, as we got 2 minutes of the opening, it remains on this lower distribution, treating it as an entirely separate day or auction. Do I remain within balance? Do I look outside of balance and fail? Do I look outside of balance and accelerate directionally?
Okay, great. And we have a question. If we look above the overnight high and fail, at what point would you enter a trade short? And I think, Jim, just to flip it, since we're right here and now, the same question could be, you can answer his question for the low. I mean, they're trying very hard on the low here to take it out. So when would Jim get in if we look below the low and the pullback low at 82.75 to address? There's a couple of people that asked that. When would
Yeah, I,
you
I
execute
can't,
the trade?
I can't answer that question. It has to be based on how I see the market trade and develop. And I understand the desire. We all want to have some exactness and some comfort. What would I do? I don't know, because the exact price. How is it going to act when it takes out the overnight low? How's it going to act when it gets the stops down here? A lot of what's going to be, I'm going to be looking at how much confidence did it do that with. If it takes this out, if it really has a hard time taking this out, it really has a hard time taking out, the H period low, and then it just slows down here. Well, once it comes back in, I might go long at that point. But
You would
so
wait for an entry back into the upper distribution or into the overnight
more
range.
than likely, I would wait for an entry back in, and I would more than likely do it with 2090 calls or something like that. The way I trade it, because there's a lot of volatility in this market. Okay, so now we've opened. The market is open, and we are trading exactly at the overnight low. So you're seeing mechanically goes to the overnight low, bounces off the overnight low, So now today's low is considered a weak low because it went exactly to a reference. When it goes exactly to a reference, the overnight low, and buyers come in, that is not strong buying. That doesn't mean we're not going substantially higher, but larger money doesn't come in exactly at that level. The people that buy exactly at that level are usually the shorter term, less committed traders. By less committed, I mean they are the traders that will exit more quickly. If you look below it and fail, then you may have a little stronger trader. But going exactly to a reference is what we label as a poor low.
Jim,
Sure, go ahead.
would you now consider the market overly long because of Friday's move, or is the situation corrected from the short inventory and more in balance now?
My guess is it's more in balance, but I honestly don't know that. But that would be my guess. Okay, that we're more in balance because it was so overdone on Wednesday and Thursday.
Yeah.
Okay, now we've looked. We went exactly to the low, and to the overnight low, and bounced back up through the opening. And again, this is depending on how you're thinking. If I were looking to go short, which I'm not, but I'm just talking through what I do sometimes. If this goes to the overnight low, and I'm looking to get short this market, a rally, I may buy my puts or short the market on a rally off of this overnight low, because remember, I've already identified this as a weak low. So what I'm saying is the odds are pretty good before the day is over that we're coming back through the 2083.50 level.
Okay.
So you've seen that little piece of information. We don't know if it's going to take it out or not, but you see how this is where you make, as a short-term trader, this is the kind of thinking that can really give you an edge. When I looked at that low and it rallied, so I'm a short-term trader, I think there's a pretty good chance we're taking that out. And as you can see, what we're talking about, it went up a couple ticks through the opening, and it did come back and take it out. Now, where are we? Now we've taken out the overnight low. I'm sorry, we've taken out the H period low. And I said there were likely stops below here and stops here. But if you go back to what I said, if you were looking to get short, you didn't give you a lot of time, but this was a poor low, a very valuable piece of information. The market rallied up, weak low here because it was exact. The market rallied up, didn't give you a lot of time. But if you're quick and you wanted to be short, that was your short right there. Mm-hmm. Now, and I'm not saying I would do that trade. Doesn't mean I wouldn't, but it's hard when I'm talking here. But I wanted to point out the kind of things you're looking for, and to get an edge, how quick your reaction has to be. Now, the next thing is the question, somebody said, well, when did you get back long? Well, we said, you gotta be careful. It takes out the overnight low and the afternoon pullback low. There's a chance there should be a lot of stops there. So sometimes you get this spike down, and all it was stops. So if I'm short right now, which I'm not, but if I was short, I don't want the market to come back above the 2082.75 level. If the market comes back above the 2082.75 level, then there's a pretty good chance that we're going to get a rally. Again, I don't know that for sure, but remember I said it's not uncommon to go get these stops. When you took those stops, gets a flush down, which was nothing more than triggering the stops. So now we're going to watch this market. Let's look at overall confidence. We opened, we went lower to exactly the overnight low. We rallied up above the opening, couple ticks. We came back down through it. Not a particularly high confidence situation. Not low confidence, but if it was high confidence, it probably would have cratered right from the opening. So right now what we're dealing with is the pullback low is our upper reference at 2082.75. Our next reference on the downside is the 2078 even, or 2078.25, which is a single tick above this. But right now, everything we've talked about so early before we open is in play. We're looking at the afternoon pullback low. We've hit the stops. Julie, I'm talking too much. Some questions?
Yeah, thanks, Jim. Getting asked, could we do this breakout trade and accelerate, breakout and accelerate lower trade? So if you want to address that. I mean, that's where
Well,
Jim tries to get he says trade location is the best risk tool we have available to us. So he sees the print early to
and
exactly the overnight low. It bounces, then he tries to put it out, and he was saying that in real time. Getting on it
in the
now, I mean, where do you put your stop? Are you going to put your stop back inside overnight range?
no, I put my stop someplace above 2082.75 if I was short. See,
Well,
what
yeah,
I was looking at, what I was trying to show you how, if in fact you wanted to short this market this morning, when this market bounced from exactly the overnight low up, if I'm a short-term trader, I want to be short. I'm going to hit click right there. I'm going to be short because that's a weak low, and that's why I stress the weak low. Now, right now, the market, the temperature direction is down. Confidence isn't all that high.
can you turn
We've
the
hit some
gears off,
stops.
Jim? Excuse me.
Can I do what?
Turn the gears off.
I thought they were because it was green. It usually takes
No,
them off.
take the green. You got to click it. You got to, yeah, okay, you did. Okay,
Yeah,
maybe
well, I
it's,
clicked it before to get them off.
they were showing.
Okay, all right. So, but overall, here's what's going through my mind. This is not a high confidence market. Remember, we went exactly to a reference. We came back up through the opening, and then we came back down again. We got what I expected, the stops, but we've had no real downside follow through other than getting the stops. Had I done this early short, I can tell you that I have stepped aside if I did that early short. The market just doesn't have the confidence. But what's important here is we identified ahead of time the stops. We identified the potential for traders to go after those stops. They're very attractive or very juicy to short-term traders. I knew they were there. I told you they were there. And so far, that's all that's happened. So what have we done now? We've now looked, as a short-term trader, we've now looked below the pullback low, and the short-term trade is now to the long side if you want to trade. It's now to the long side with your stop sometime back below the 2082.75 level. The thought process in here was looking at the confidence early this morning, and you got to make some decisions on the fly. We may still go back down. Again, remember, there can be some very strange trading in the first hour this morning because of people that got assigned on the options expiration. So confidence is not particularly high on the upside. It's not particularly high on the downside. Right now, we're back to the low. So it's a kind of a narrow range, a lot of volatility, hit some stops, but no real downside. So tough call. And we didn't get down to the 2078 level. Okay, questions? Questions, Julia?
Yep, hold on. I just have some questions on stops, but I got long at the failed look below and fail, but cut the trade off. Okay, that's from before. I'm sorry about that. We don't have a lot of questions.
Okay.
1 second, hold on.
While Julia is looking for questions, we have got something coming out that I think is a very, very strong piece. Julia had an idea to put together a trade worksheet, and it identifies some of the references and
A checklist.
and a lot checklist and the things you're looking for throughout the day, starting from the opening. Part of my problem with the checklist is that, in order to make it work, it's linear. You go from here to here to here, and markets are everything but linear. So what we decided to do this weekend is Julia has completed the checklist, and then I am going to I'm writing a supplemental document that goes with the checklist that expands more on what you are looking for in each of the areas on the checklist. The checklist starts with, section A, which is where you're looking at the monthly, weekly, and daily charts. And then when you go on to the accompanying document, it will give you an idea what to look for in section A. So if we put all that information on the same worksheet, it gets very cluttered and easy to get lost. And some people may be fine with section A, questions on section B, so they'll have the clean sheet in order to make marks during the day, but then they can always reference the supporting document. It won't be perfect, but it will give you an idea of what you're looking for in each of those sections. Julie, do you want to say anything more about your idea of the trade worksheet?
No, I just think it would keep it clean. And one thing I think, Jim, why you've done so well over the years is that you analyze the market the same way every day. You're looking at the same things, so there's a structured preparation, and you notice when things are amiss. But then when you get into the trading, you're more fluid and going with the auction. So I just think it would be good for traders to get in the habit of using that structured preparation, following, like a pilot does, a checklist. But then, obviously there's things you've got to be thinking about in conjunction with one another as you're reviewing the checklist. Is overnight inventory long? Well, on Thursday night, the overnight inventory may be short, but you're also saying, geez, this market's short from Wednesday and Thursday. So this is sometimes extenuating circumstances. Or I should say if the overnight inventory was long coming into Friday morning, it can be offsetting. But anyway, yes, that's all I want to say about that. We have some other questions, Jim.
Okay, let me say one other thing. The trade sheet, just as our preparation, always starts from a big picture, top down. But as you go through it, what it's trying to do is lead you to your final tactical plan for the morning and the options, depending on which way it goes. But it's also trying to bring it down to what I call ruling reason. If you look at the trade worksheet and all the analysis, it's very broad, but you have to bring down to a practical level. So my ruling reason, as you went through all of this work this morning, and you cut it down, the ruling reason this morning was the upper distribution from Friday. Are we in or out of balance? So it continues to bring you down towards a place where you can start to make your tactical decisions and be ready for the trading for that particular day.
Mm-hmm.
And one last comment before I take the next question. You always want to have multiple scenarios and be able to adjust for change. And today it's a touch and go in here. Additional questions, Julia?
Jim, the pullback low versus the overnight low, would you consider the pullback low more important than the overnight low, or do you have any quick answer for him just asking that question?
I think they're important as a combination.
Okay.
Because they're so close together?
Yes. Okay, very well. Since we're building value below the upper distribution from Friday, is this viewed as negative in this context?
At this point in time, yes. What we're always looking for is developing value. Now keep in mind, it's a little early. As of right now, value would be lower, overlapping the lower inside relative to Friday's upper distribution. All the value from Friday this is a little confusing because I'm only talking about the upper distribution. But right now, we're out of balance relative to the upper distribution. Developing value is going to be lower, or at least overlapping lower, relative to the upper distribution. So that becomes a very key component to my thinking in here. So right now, we've had a lot of indecision, back and forth. Now we're back to the downside. But we still haven't taken out all of these single prints. So as I said, I'm not too anxious this morning. A lot of continued indecision in here. So right now, we are still well within balance relative to all of Friday. We are out of balance to the downside right now relative to the upper distribution. But there's certainly no clear call at this point.
Right. Yep. Would you trade a break from balance area this morning or hold off because of the variance due to the aberrations you mentioned due to options expiration?
So much of that is dependent upon how quick you are to act. For example, when we traded exactly at the overnight low and rallied, if you're quick and you can make decisions quickly, then I think this is a short. I think this rally is a short. But if you go much higher, you got to get out very quickly. And then when it goes back down and you don't get really follow through the downside, I think you have to be out very quickly. But for some traders, that's an ideal trade. You had a reason to do this trade because it was a poor low. You had a reason to do the trade. I'm sorry. It was a weak low. It was a weak low. Weak low is when it goes exactly to another level, or exactly to a reference. A poor low is when there's no single prints. It was too early to decide to know if we had single prints. So I think, again, you're a quick trader, bang. I think this was a legitimate short, and you monitor for continuation. You have to get back down below the overnight low, and then you have to see continuation. And then if it doesn't get followed through, you're out of that short-term trade. The person that it's not for is the person that once they put the trade on, they're going to hang on and hang on and hang on because their ego won't let them, take a small profit or take a small loss. So again, it's so much tied to your personality. And that's not a very satisfying answer to a lot of people. They want more exactness, but that's the real answer. Again, it's so personality related.
Right,
Just as if you wanted to be long, in this break and come back in, I could see the long down here, but I also could see a very fast exit from the long. And we got back up here and got no follow through. It's a very fast trade. I mean, remember, you can wear yourself out doing this. But let's go back and say, what is the confidence level this morning? We opened a couple ticks higher. We went down to the overnight low. We rallied. We came back through the overnight low. We took out the afternoon pullback low. We broke lower. We rallied. We broke. Overall confidence so far this morning is low, and that makes it very difficult. And we also said, remember, there can be some very unusual adjustments relative to option assignment over the weekend. Questions, Julia?
Yeah, can you get long and use the heavy volume nodes as a tighter stop? So if you wanted to go long above the pullback low here and use that if you make that a little larger, Jim, can you just scroll out a little so we can see? You don't have to make it huge, but just that heavy volume. Would you consider that an appropriate or prudent stop if he wanted to go long?
You can. I wouldn't just because the volatility there's a lot of volatility.
Yeah.
And but again, if you do trades and you have a reason for putting your stop there, if you say, okay, I want to be long, but I don't want to get below this heavy volume, then at least you have a place to put a stop. You have a reasoning. It's not a willy-nilly, oh, I just feel like this.
Or 3 ticks.
That's where you get in trouble. Yeah.
Right.
But you want to make sure you're not finding a reason to rationalize into a trade. Right. But to me, there's so much indecision. There's so much indecision in here this morning. I've developed a great attitude, and that is, you know what? If I miss a trade, so what? When your attitude is, oh, I got to get here. If I miss this trade, I'd feel terrible. Your chances of being successful over longer term are very, very low. Right. You've got to be able to feel comfortable walking away from a trade at any point in time, whether it's a trade that you're not going to put on or a trade that you have on. You've got to get and divorce yourself from this strong emotional feeling. Other questions?
Yeah, right. No, people are agreeing with you. Okay, so the balance area we have now 2080 to 85. Would Jim go with the break either way? I don't know if Jim is seeing a balance area 2080 to 2085. He's already.
No, I'm not seeing.
Yeah, you could make it.
I'm not seeing anything yet.
So
we still, there you go. We've been back and forth into the upper distribution. We haven't gotten down here yet. I honestly don't know. The market feels heavy this morning, but that may just be from the options exercise. Remember, we're only 20 minutes into the day.
Mm-hmm. It's struggling to go lower, but there's no lift either, so it's just shaking out.
Yeah, again, I don't know. I mean, I saw two little trades I might have done early if I'm just really quick. But, you know, right now, if you're short, you say, what do I need? I need to stay below the 28, the
75.
28.70, 20.8275 level. I need to get down and take out all of the single prints and find acceptance down below the 20.7850 level. To
78.
have anything, 2078, 2078, yeah, 2078 even level. So right now the pressure's to the downside. We're going to change time frames in 10 minutes. Pressure is main. The selling is remaining. Volume is relatively low.
So we are getting some extension here.
Yes, you are, and you're getting lower value relative to the upper distribution from Friday, but you're not getting a free-for-all. And, and this volume is relative. I mean, the nice thing about the way window traders covered this, we're getting volume in here, but we're not getting huge volume. Somebody commented on this area. Would I use that as stopper? I said I wouldn't. Too much volatility in here. But um, I don't have a lot of confidence in what's going to happen in this market right in here. The trade right now, the pressure is to the short side, but it's certainly not in my opinion, it's not an overwhelming short. Again, now this low, how would you classify this low, people that are out there? Weak low or strong low?
Weak.
Why would it be a weak low?
Right? Because it went to just one tick shy of that distribution high.
That is correct. When the reference is a very mechanical reference and it goes to it or a tick within it, it is a weak reference because the only time responsive buying would only come in if you were exactly at a reference point. Longer term, more serious money, they have no idea where that level is, nor do they care. So again, it's a relatively weak low again on the downside because it went exactly to that level. Now that pullback lows from afternoon trend days have been fairly significant references over the years. It is not uncommon for a pullback low from a day relative to Friday to be lasting. So right now we are below the pullback low. So that's a sign of weakness, but we really haven't taken out all of the single prints and gotten clearly into the center distribution. So we were in a very difficult no man's land right in here. This is about as difficult as you can get for having some idea what to do. You're clearly within Friday's range. You're below the upper distribution, and you've mechanically stopped a tick above the single prints.
And what about the concept, Jim, that the harder it is to take out a reference, the lower the odds that we're going to see continuation? In other words, the market's had to try pretty hard to go lower this morning. It's now come one tick shy of our next reference. Obviously on a lift, it comes back through, knocks it out. But that concept of the harder it is to take out a reference, the less the odds you're going to see continuation from it. Do you feel that's relevant this morning?
I don't. Is it relevant? Yes. Do I look at it? Yes. The fact that, if this was really long-term selling, we'd have come through this without stopping. This is more of an indication to me that we've got a lot of trading money in here, and it's still an indication to me what I'm seeing trade, because we did hesitate at the overnight low, we hesitated at the pullback low, we hesitated a single print above this. Still an indication to me that I've got a lot of short-term money, trading money in this market, and but it hasn't been terribly pushing on this to take it out. So you got the other concept. There's a weak low. which, better odds that it gets taken out because it was a weak low as we talked earlier. Now we're back down, pressing it again. So that idea of the weak low. Again, if you want to go long, your stop is someplace down below here. But remember, there's no shame in sometimes in saying, I just don't like this market and I'm not going to do anything right now. There's absolutely nothing wrong with that whatsoever.
Mm-hmm.
But the only sense I get in here that I get a sense I'm getting some correction from late longs and laggard longs on Friday in here, but it's not a free-for-all so far.
What about the single prints for today, Jim? Do you feel like the single prints catch your attention and that you feel like there's too many or that they're unlikely to stay that way for the day? In other words, we're coming back through it.
There is a lot of single prints relative to the confidence this morning. So it's not, again, there is a lot of single prints relative to the confidence, but where I'm focused more on what do we do relative to the pullback low and that lower distribution from Friday. Do I come back within that distribution or not? We've been back in there a few times. I see low confidence this morning. I see a lot of emotional buying and selling, and I think I see some inventory correction relative to Friday. Relative to Friday afternoon, what I don't see at this point is high confidence in either direction. So far, the attempted direction has been down this morning. I'm going to go look with 3 minutes to go before we change times. I'm going to look at volume, and volume can be somewhat distorted because of the expiration. But any real volume on the sell side this morning, I would want to see over 450, 460, or maybe 480. Okay, so I'm seeing pretty good volume. So far this morning, a couple minutes ago, I'm seeing 438. That's pretty good volume early this morning. It is not overwhelming volume. Remember, we've got 2 minutes to go. It's not overwhelming volume, but the next couple minutes, I'd like to see 460, 480, see what we get with a couple minutes to go. So it's not overwhelming, but it's not light volume. Okay, so we're going to change time periods here in a couple of minutes. We are still in a very difficult trading range. It's indecisive right now. Once a market opens, and on the trade worksheet that Julia has developed, we have a section that identifies the references that are created after a market opens, and refer to the references after a market opens as dynamic references, meaning they are references created via the market. Examples of those references will be the opening, the early morning high, half back, which is right here, the early morning low, and then we'll look at the 30-minute highs and lows. But so right now, half back is a dynamic reference, and it is generally a reference recognized only by the day and very short-term traders. This last market rallied, I believe it was just a tick or two below half back before the sellers came in again. And if somebody was looking more carefully than I was, that's what I thought I saw. Just a couple ticks below half back and the sellers came in. That is not a particularly strong sign. Good money doesn't have to wait till you're right at half back before they sell. Trading money will do that. So again, we're going to change time periods in a minute. We haven't taken this low out yet. But again, it remains fairly indecisive, but we are clearly out of balance relative to Friday's upper distribution, but we are mechanically holding above the single prints. Okay, so now we only have a 2-tick low, very mechanical market in here. We're going to go back and we're going to look at what the actual volume was for the first half hour. Remember, if there's really anything, then I want to see 460 to 480 at least.
Someone's asking if I could ask fellow traders here if their volume numbers are similar to Jim's. Mine are.
Okay, I have 470.
470.
So it's respectable in the first period.
Oh,
it's not overwhelming.
and
Okay,
if you,
so now we go ahead.
No, please.
Yeah, I was going to say we had a weak low. Remember, it was a weak low because it went exactly to a reference. Then we had a poor low for a second. Now we're extending on the downside.
So when it bounced, one could trade it if they wanted to go short, but trade location
that's a
legitimate
trade.
A little tougher.
Okay.
Yeah.
I don't know what we've got. Go ahead. Sorry.
Go ahead.
No, I didn't know. I mean, we're at the end of our hour, and I didn't know what we had left for questions.
Yep. You don't need two periods to define single prints. You just see them as you see extension of a period and you start thinking, are there too many single prints? You know, just look back over your profiles. How many times do you see a period with that long, a tail? Now, we did see it on Thursday there when the market continued lower from Wednesday's downside day. But it's unusual, particularly when we're in the center of range, like we are here, to see that many single prints hold. Again, when
notice.
Go ahead.
Notice so far we have traded below and filled the single prints, but we have not had acceptance down there. Remember, I said the last rally came from just a tick or two above below half back, which is usually a sign of trading money, not a sign of longer term money. So half back remains a day time frame reference. Okay, do we have any more questions, or does that complete us for the day before I do a little commercial?
No. How to get the confidence of today's anomaly reference levels, 2078 quarter, to get them repaired? I'm not sure. It was a low. Maybe you asked when it was a poor low. We had a double wide A and B bounced, and now they've cleaned up that poor low. So we do have excess. It's a secured low now.
So far, what I'm seeing this morning, I am seeing liquidation to Friday. I'm not seeing massive selling, but that doesn't mean that the market doesn't start to get legs. They're pressuring to the downside. It's come back a lot relative to Friday's strong rally. Now, we have anomalies on Friday. These anomalies down here, you have anomalies at the 2072.50 level. You have anomalies right here at the 2071 level. You have anomalies down here at the 2069.50 level, which, as again, the rally going up wasn't any better than the rallies going down. Okay, so right now you're extending on the downside. You are down into the second distribution. The destination trade now, it's a long way away, it becomes the 2063 level, which is the lower extreme of that second distribution. So you're seeing some liquidation in here. And now the reference point now becomes, if you're going to keep this double distribution, the early reference at the 2078 level, is probably if you're short, it's probably a place for a stop. So right now you're seeing liquidation relative to Friday. What happens sometimes is it goes for a while, then the market gets a little courage in here.
And
anyhow,
the oil is down now. There's a question: is oil dragging us down as well? And Jim will make the comment that if a market is weak or pretty much trading money and not convicted, anything can have the market's eyes on it. So, oil today certainly could be something, affecting the
This
S&Ps.
is not, for months, I have not seen any sign of anything other than trading money in this market. Certainly, last week's break on Wednesday and Thursday didn't show me any indication of anything other than trading money and panicked emotional trading money. Friday's rally didn't show me anything other than short covering and emotional trading money. I still don't see any evidence other than just a lot of short-term emotional trading money in the market. When you have a market with those conditions, a move in the dollar, something a Fed speaker says, or something that Janet Yellen spoke last week, I mean, these short-term traders, they just glom on to anything, and they can take the market directly a long way because of all the emotion involved. But so far, I still don't see any indication of anything other than trading money and very emotional trading money in these recent markets. And that makes it very difficult. A lot of times people want to know, well, what is the trend? What if I say, I don't see a trend? But, well, there's got to be a trend, Jim. I said, no, I don't see a trend. And if you go back and look, here, let me make these smaller, and look at we've just been back and forth. There's just not a lot going on in this market, and they can be very dangerous, very treacherous markets to trade. Additionally, remember I said earlier this morning, following an expiration, you can get some very unusual things going on. Confidence today has been relatively low. Yes, we're going lower, but it's not a free-for-all. So I don't have a lot of words of wisdom other than we are seeing liquidation relative to Friday. Friday was short covering relative to Wednesday and Thursday. Today so far is a pretty aggressive pullback relative to what we saw on Friday. It is unusual that you get a market that went up as much as it did on Friday, pull back this much today. But remember, we also have a lot of anomalies down here. So it wasn't a healthy rally on Friday. Mm-hmm. Okay, mm-hmm. Let me say thank you. And remember, we've got the intensive coming up starting. The first one is January 19th. During the intensive, we're every morning, I believe it's every morning, we're on for an hour in order to give you an hour and a half to give you an orientation prior to the market opening and then being with you after the market opens. There will be a daily report and an updated morning report. And then while the intensive's on, I put out hopefully relevant chat comments throughout the day. It's a one-way chat, and the purpose for that is so it doesn't get cluttered with a lot of questions that aren't of interest to everybody. Questions can be answered via email. Then, for those that are going to participate in the continuation program includes both intensives, and between the two programs, initially we said we would continue to provide both the daily report as well as the update report in the morning. We've now decided, because there's been such a large participation and interest in the continuation program, I will do a minimum of 2 chats a day between the 2 intensives that will be on the live chat comment. I mean, there may be exceptions if I'm gone or on vacation for a day or so, but generally there will be 2 and maybe more chat comments. So we're trying to stay as connected with you as we can to give you as much information as possible. Anyhow, a final question, Julia?
No, we had some questions about will I still have Q&As. Basically, in the morning, Jim will be on 9 to 11, and then we take a half an hour break, and then I will come on twice a week to have the Q&A sessions. If we need more, I may move it to 3. But that way, traders that are trying to play catch up, we keep Jim's sessions pretty advanced, and then in the sessions I moderate, we'll, take all kinds of questions to make sure everybody is keeping up and not falling behind and feels like they're understanding, as we're working through the days and weeks. Okay, so that won't change.
And additionally, there'll be a parallel education course. We haven't worked out the total schedule yet, but there will be a linear type of educational course where we'll talk about such things as how to do market preparation, the opening, conference, weak lows, high lows. So there'll be a continual reinforcement through a scheduled linear education program. But even though it's a linear education program, kind of following a script, which we're still mapping out, we still will continue trying to take it back and relate it to things you've just recently seen in the market.
Yeah, I mean,
Okay?
the three new things, really, the educational track, we're going to have a more structured curriculum to follow alongside the real-time application that you're getting a flavor for here. And then we'll have the options methodology that Jim will be literally calling options trades and talking about what he's thinking about in the chat, and we'll have sessions just to talk about how Jim trades options and apply it right in that market. Okay, look, I'm looking at the 2090 calls here. This is why, explaining his thought process. And then the third part is Jim's really loving this book, Nonsense, and talking about uncertainty and ambiguity. And we're going to have a psychology section, and then we're going to talk about that, and really even writing the article to supplement this trade checklist. Jim had some really great insights on risk. That risk isn't just about how much I'm losing on a trade. There's all kinds of risk of missing a big opportunity, risk of wearing yourself down in the first couple of periods here mentally. So we'll just be talking about the psychological aspects and in the Jim Dalton style, which is very unconventional, that I think will really add a lot to your experience in the intensive. So those are the three new things, and obviously we want to add as much as we can since these are the last two intensives we'll be doing. So if you have any questions on that, of course, you're welcome to call or email. And we'll be back next week with these Run for the Roses. We have 2 more Monday sessions, and we will have some sessions in January as well. So
just a clarification before you go. One of the things that Julia was talking about, risk, there's also the risk of not doing your preparation. That sometimes is the biggest risk imaginable. But nobody, conventionally, they don't think of that in terms of risk. But
right.
not preparing properly is probably one of the biggest risks. And we're going to be focusing on those things that you can control. There's things that have to do with risk that a lot of times you can't control. They come up very suddenly. A Fed speaker makes some kind of announcement, or some major event takes place that comes out of nowhere.
Yeah.
And some of those you just have to be able to adjust very quickly. But there's other things about risk you can control. And preparation is certainly one of them. Getting the proper education and understanding how the market really functions, that is also a risk control function also. The other thing I wanted to say, I just wanted to be clear on what Julia means when she says calling option trades. She said the calling option trades bother me a little bit. The description didn't. For example, she's absolutely right. I meant to be sitting and saying, for example, I don't like this market on the downside. I'm not saying that, but I might say, I think there's a possibility of a potential rally in here. And I might say, I'm now looking at the 2085 calls. And sometimes, and where I exactly buy them and where I exactly put them, and do I put them on? Sometimes I don't put them all on at one time. It's not all or nothing. But I will tell you what I'm looking at, why I'm looking at it, and then sometimes you have to go in and place your orders because these things are fairly thin sometimes. So anyhow, it's just a slight variation. Tell you what I'm looking at, what strikes I'm looking at, and why. Maybe not the exact place that I get filled. Okay?
Mm-hmm. Yes, exactly. And really the thought process, why you're thinking of doing that, why options appeal to you at different times. And just to go over, bring that into your trading arsenal. Sometimes the risk is putting on outrights, and where you have to put your stop, it's just more than we're willing to take on from the risk side. So options are a viable way to express our interest and to get in the market, but have less risk and a little more staying power. So we're going to get into that in detail, and Jim will teach it. He'll definitely be teaching it thoroughly. He doesn't do anything that he says he's going to do halfway, so you can be sure of that. And we'll have 5 weeks to go through it and use examples and talk about things. And in the Q&A with me, you can ask questions as well. So we will be covering it thoroughly.
And can I do a final recap before we sign off?
Yeah, please do.
Okay.
Thank you.
So far, the opening, we saw the confidence was relatively low early on. Pressures to the downside. We did look below the upper distribution. Somebody asked earlier about the difficulty of taking out highs and lows and references, and I said, well, I'm not sure it's that relevant today. What I thought was more relevant was we pour the week low initially because it went exactly to the overnight low, and then the second week low down here when A period went just a single tick above our G period reference. Those are 2 week lows. Both of those were taken out. But overall, I see the overall confidence as relatively weak today. Remember, one of the last breaks came from I believe it was 2 ticks below half back, so a very mechanical level. So I'm not seeing high confidence on the downside. Am I seeing liquidation? Yes, I am. Am I seeing acceptance well below the upper distribution from Friday? Yes, I am. Am I seeing a cratering effect? No, I'm not. We still have not had acceptance below the single print. So again, I still think we're in a relatively low confidence environment, and I'm not going to be a bit surprised. Julia asked about these single prints earlier. Was that a lot of single prints relative to the confidence? And I kind of hemmed and hawed because I want to see what we got on the downside. The fact that we got, we're back up in this area, they're looking more and more suspect at this time. So the net is, it is still a relatively low confidence day. It appears to be a correctioning balancing day. And remember, we had the unknown because it was a Monday following a weekend options expiration, and that can give a strange tilt to the first hour or so of the market. So once again, let us both say thank you very much, and we hope you'll be able to join us for either one or both of the intensive. Thanks again. Julia, you there?
I beg your pardon, I was on mute. Yes, Jim, thank
Okay.
you very much. Much appreciated, and thank you everyone for being here. And if you want to call, I have a few people asking, you can call me. Just try, you can call, and I'll pick up. And if I can't, I will call you back. Okay, so thank you everyone for being here. We'll put the recording up, and we'll see you next Monday with reports the 14th at 9 a.m. Okay, be well, God bless you, and have a great day. Bye-bye.
Thanks.
Bye, Jim.